The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 21st, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but way more important than that, during this next hour, I'm here to serve you. So feel free to give us a call. You can do that at 877-927-6648. If you can't call in, we understand. We got you covered. You can let those fingers do the walking. That's right. You can send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question, of course, in our Tiger's Den. Any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow trading up 287 points. It's a little over 1% to the upside. S&P up nearly 1%, 26 points, $75, 75 points. That's 1% for the NDX 100. Russell up 14. Semis are up 15. So it's a mean and green across the board. Spot volatility index is pulled back. Right now, it's a minus 10.17%. Something to think about. It's trading out at 1572, well below its 50-day exponential moving average now, but it's all going to be about the close today. Gold is flat, silver is flat, light sweet crude is flat out here, leading the charge the upside. Amazon up 22 bucks, Target up 19%, 16 buckaroonies. That's a heck of a move. Mercado Libre 15, Shopify 15. To the downside, it's CREE down 9 bucks or 16%. Madison Square Garden's up 2.5%, $7. Baozun Inc. probably screwed that up, down 12%. That party didn't screw up. It's off $6. And Children's Place down about 6% or $4. Of course, I want to look at what you want to look at, and what you want to look at comes from Craig. Craig is our first requester out here, and Craig wants to take a look at 3M for an intermediate term buy. So if we take a look at 3M out here for you, take a look at our 3 different time frames, Craig. We'll take a look at daily, weekly, monthly, as well as the quarterly. So I guess that's 4 time frames. 4 in 1, we can see that 3M is trading right into the bottom of its bullish structure daily profile out here. That level is 162.04. You're trading 162.11. Below the weekly profile and below the monthly and quarterly profiles out here. So you're asking about intermediate term time, and that says, hey, the question is, was 3M a bottom 4 or 5 days ago? Well, for intermediate term time frame, what I'm going to do, Craig, is just really take a look at the weekly time frame chart out here. And here's what we know at the moment. We know that 3M is pushing lower, doing with less relative energy. That's the only bottoming signal on a weekly time frame that exists right now. Now, the cool thing here, we do know it's below its weekly profile. We took a look at that. It's also confirmed right here. And it's below Stevie's red line on a weekly basis. But here's the cool thing. If this is a bottom, if there is an intermediate term bottom forming, you're going to see some type of bullish reversal candle. That doesn't have to be this week, but that's what you're going to look for. And then you're going to look for a close. Stevie's red line, the bottom of that weekly box are about one and the same, so 165.36. So you need to see a bullish reversal candle That would then at least get you into that trade. The confirmation would be levels of resistance failing, which right now would be 177.45 from a weekly standpoint for 3M out there. No other signals on the monthly time frame that I've got out here. So you're just watching the weekly and you're looking for some type of bullish reversal signal. There's nothing on the daily time frame. When I say nothing, nothing that I have from a bottoming pattern out here. So that's our take on 3M. Thanks for writing in. I hope that helps you out. Let me know if you need any additional information. No other questions in the queue, so let's go take a look at the markets. Obviously, as you all know, you've got the Fed release of their minutes coming out at 2 o'clock. And I suppose the question is, are the markets going to just crater after the release of the minutes? Really? That's what you're thinking out there? That it's the release of the minutes, that's what sellers are waiting for to just sell off this market? More likely they would be waiting for Friday when Powell speaks to the folks out on the West Coast, right? Where's he at? Yeah, he's at the Hole, isn't he? So if you're sitting there thinking right now that the markets are going to sell off come 2 o'clock because of the release of the minutes out there, well, let's go see what the markets are communicating to you and I. Maybe you're right. Maybe I'm just wrong out there. But let's simply go take a look at what the markets are communicating to you and I. I can give you both the bullish case and the bearish case out there. So let's go take a look at both. What are the charts that are really important to pay attention to? I believe the most important time frame right now is the 2-hour time frame. That's right, the 2 hour, the 120-minute time frame. So what is it that we know? Here's the ES Mini out here. Now, the ES Mini has had resistance at about the 29.26 to 29.36 level. We're at 29.27 right now. So here's the deal. If you want to sell this market, you're basically in the zone right now to do it because you've got resistance at 29.3650. So I get that. It has nothing to do with the release of the Fed minutes, though. For goodness sakes, please. The reason why you would consider doing this is because the high so far inside the 120-minute chart is wave number 7. That was letter G. That happened yesterday, but then we had the pullback. So maybe not so fast out there. But 29.3650, we'll call it 29.37 for you. That's going to be the key. Maybe the release of minutes gets the ES Mini over that level. And if it does, one thing I can guarantee you do not want to be short. If all of a sudden the ES Mini can break above all of these breakdown or resistance points on the 2-hour time frame chart out here, which is 29.3550, 29.2675, 29.3650 out there. Okay, so that's the ES Mini. How about the NQ? What's the 2-hour time frame chart for the NQ showing? Well, let's go take a look at it. We can see here that price is sitting right at that resistance level, its resistance level, 77.5850. We're at 77.47 right now. Now, as price was attacking that level earlier this morning, it got up to wave number 7. That's letter G. We just took a look at wave number 7, the ES Mini on the 2-hour time frame chart. We know that when the market sings in the key of G, that there can be turns. So you're up at resistance. You've got the key of G. You also have price stretched. Stretched meaning that it was moving higher. It has been moving higher, doing less relative energy, but no bearish reversal signal. Look, we had that same pattern when the most recent bottom was formed, the Rhodes Momentum Indicator. But you'll see that generated the Rhodes Momentum Indicator bullish candle. We don't have that inside the NQ right now. Something to think about. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back. Dow's up 275, S&P 25 points. So we're taking a look at both sides of the trade, which we really need to do. We've established that the ES Mini, the NQ, are up at resistance. The Dow Equity Futures contract on its 2-hour time frame chart is what we're referring to. It's the ES that has the largest congestion zone of breakdown areas, though, that is why I believe the 2-hour time frame chart will be the one that's communicating a bunch to you. But if we take a look at the 2-hour time frame chart here for the Dow, you can see it too made that Rhodes momentum indicator bottom. It's right now in the process of trying to form bar number 8 that will complete at 2 o'clock. We know that turns can occur when there's a high on bar number, in this case here to the downside, bar numbers 8, 9, or the bar following 9, but it has not completed this 9 count, so I don't know if it's valid or not. What we do know is resistance is 26,317, no matter how you slice it inside the Dow Equity Futures contract. Any close above that would tell you that you've got a change in trend that is underway. Of course, a change in trend may have already been marked way back on August 15th when that Rhodes momentum indicator signal was generated. So there are reasons, and I can completely understand why the bears might want to, or sellers might want to go ahead and take a stab at it. However, Lee Corso would say, wait till Stevie finishes his analysis, because it might say not so fast. Because what I would ask you is the question, what's different about this time moving up into resistance versus yesterday, versus back around August 13th, versus back around August the 9th out there? So what's different? What is different about those dates and now today? Because that's a great question, and I am glad you asked that question. And the one difference, and it's a gigantic difference. Now, it's an end-of-day thing. So I'm going to give you the reading right now at 1:20, but it's really going to be all about the reading at 4 p.m. today. And what is that? You already know what that is. And you know that that's the spot volatility index. If you look at the bottom panel of my screen out here, you'll see a little red line. You'll see two yellow lines. The blue line happens to be the actual closing price of the spot volatility index. The 50-day exponential moving average is the red line. Up until today, the spot volatility index has been above the 50-day exponential moving average since July 31st. But right now, as we speak, the 50-day is at 1638, price is at 1572. This is a different configuration than those prior attempts to try to take out resistance. Pay attention to this. Please pay attention to this. Now, it's going to be an end-of-day reading. It's 1:21 out here. I wouldn't take any action right now, knowing that, yes, we're up at resistance, but that resistance can fail. It's been trying to crack through it, crack through it, crack through it. Eventually, it's going to crack through it. Now, why would it eventually crack through it? Well, the reason why it would eventually crack through it is because of the daily time frame chart for the ES Mini, which generated a nice Rhodes momentum indicator bottom. It did that on August 15th. It confirmed that on August the 16th out there when it generated that three-river morning star. Yes, price is not above 29.44. That's going to be a real key resistance level for the ES Mini. But all of the conditions right now are ripe for the markets to continue higher. Markets, when that spot volatility index is above the 50-day exponential moving average, generally speaking, I'm not trying to identify the top or the bottom out there, but all you really have to do is look at this chart. This chart tells you the story. The yellow boxes or rectangles are periods of time when that spot volatility index is below the 50-day exponential moving average, whereas the green rectangles are when the spot volatility index is below the 50-day exponential moving average. So in other words, Stevie might have to draw his next box, which would be green from today forward out here. Again, an end of day, I can't control how the markets are going to respond to the release of the Fed minutes or what Powell might do come Friday. But what you and I can do is ask ourselves, are the charts generating any signals for us ahead of time? Because it's really the chart work, it's the signals, it's a technical analysis that is providing us with the tell ahead of time out here. And the ahead of time right now says these markets want to motor on higher. The last thing that is in the way of them doing that are those resistance levels that we looked at on the 120-minute charts for the ES, the NQ, the YM. But I don't want you being lulled into that, because this time, right now, this very moment at 1:23 in the afternoon, it is different. It is majorly different just by taking a look at those boxes. Now, maybe at day's end, it isn't the reading at 1:23. Granted, I totally accept that. This is based upon a daily closing out there. But if you're wondering if there's a signal, this is like a layup. Like Friday would be a layup, because of the technical information, because of the spot volatility index being below the 50-day exponential moving average right now. And if that's the close and you continue to see that, then don't expect that. I mean, look, we have all seen, I've missed a simple layup out there. I'm not really referring here to stock charts or what have you, but we've perhaps all missed layups in our life. But usually we make those shots. And so the market is just simply delivering to Powell on a silver platter, assuming the spot volatility index is below the 50-day exponential moving average line. Now, what else do we have that's suggesting that the markets want to move higher out here? Well, what we have is the New York Stock Exchange Advanced Decline Oscillator. It's above zero. It's a beautiful thing. This is telling us that liquidity, there's plenty of liquidity in the market as we speak. What else do we know about the markets? Well, if we go take a look at the high yield corporate bond fund out here, if we do the correlation between this and the S&P 500, this is also generating a similar message out here of liquidity. It's one of the ways that we can take a look at understanding liquidity in the markets, and that's really what it's all about. So the end of day will be really important. But what we can say as of 125 is markets are set up to continue to move higher. So if you're short, hey, God bless you. Not because you sneezed out there, but I would say keep those stops in place and be very careful out here. Now, with regard to market profiles, Bobby asks, hey, can we go take a look at market profiles out here? We can. Unfortunately for the ES Mini, that's the left-hand panel out here, Bobby, the market profiles are above where price is trading. So likely on the continued move higher inside the ES Mini and the S&P 500, where price is targeting is going to be 29.77. But before price gets there, what we're likely to see is the Dow tackle the top of its profile. And the top of its profile is 26,408. That's going to be a key level to be watching. Now, that 26,408 is where the previous highs are. So if there's some type of consolidation going on inside the Dow, I totally get that. In essence, this is what it looks like, something like that. There would be your consolidation pattern, which matches right up with the top of that box. Now, the top of that daily box out here inside the Dow Equity Futures contract is bearish in structure. The center is closer to the top than it is to the bottom. But right now, we're well above the middle of the box. This says price inside the Dow wants to go tag 26,408. And then a close above that, Bobby, you're back to the highs. Back to the highs for the Dow. Steve Rhodes with TFNN, one step at a time. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow up 273, S&P 25. So just to summarize here, I absolutely can understand why folks would want to go ahead and short this market, why they want to go ahead and short it about right now or so because of price getting up to resistance, key resistance levels that show up on the 2-hour time frame charts. Those were set up by the TD setup 9-count patterns out there. And but this time compared to prior times up there, things are different duration in the market. You've got, as I said, the high-yield corporate bonds. They're at the high of the day right now. They're up above those August 13th levels. That's, in essence, what the market itself is doing. So the signal here, we're just looking for signals. John asked, do I have any instinct or something? What was the word that John used in the den? Any hunches as to what the market, what the S&P is going to do, leading up into Powell's speech on Friday? And no, I don't have hunches. I just, take a look at the stock charts, take a look at a handful of things to help us identify what it's communicating to us. And so in this instance here, it's definitely communicating to us something different about those resistance levels. It won't surprise me if they hold. It definitely won't surprise me if they fail. So more on the fail. But we just have to go ahead and take a look at the numbers. If you wanted to short right now and you've got your stops above those resistance levels, that's the way to do it. It's just that right now things are different, suggesting that that's perhaps the wrong action to take. Now, I won't say perhaps. I'm going to say it's the wrong action to take at this moment. Instead, let's just wait to see how the day plays out here and go from there. But at this stage, I am not anticipating. The markets are communicating to you and I that if you think there's going to be some type of huge downside move come 2 p.m. because of the minutes, well, then the market has it all wrong. Then all these tools that we just took a look at are wrong. Now, they're not really wrong, so to speak, because some of the things that we looked at were end-of-day readings. And really, to be fair, we have to wait for the end of day. But if at the end of the day, the spot fixed index, by the way, closes below the 50-day exponential moving average, let's just go back to that chart. If I ask you and take a look at this chart, this bottom panel, where is it that price would then target? You have 2 yellow lines, 1 red line, which is the 50-day, and a close below the 50-day of 1638. Where would the spot volatility index be targeting? Exactly. The bottom yellow line. That's 1277. It's $3 below where we're trading right now. And so I ask you, if you do get that close below the 50-day exponential moving average, what do you think the odds are that the markets move higher tomorrow, Thursday? And move higher into Friday as the spot volatility targets that 1277 level. So just something to think about. But hey, look, there's more for us to consider out here. There's got to be other resistance or support levels to look at. So let's go figure out what those are. Let's go take a look at our horizontal trading ranges. So now, as we take a look at the ES Mini, and this is the ES Mini, and this shows us our daily, our weekly, and our monthly horizontal trading ranges out here. So what is it that we know? We know that at 29.33, 29.34, there's both a daily and a monthly horizontal trading range number. So John in the den was asking, do we have any hunches as to what the S&P 500 might do out here, or the ES Mini might do? So we do know is, should we see a close above 29.34 out there, John, what it would be signaling to me is that price wants to move up to 30.14 level, its next horizontal trading range. What we've seen over the course, this is a daily time frame we're looking at, although it's got its weekly, its monthly, and its daily horizontal trading ranges out here. Although we've really seen for the last 3 days is nothing more than just trading in between the daily horizontal trading range level at 29.34 and the monthly down at 28.93, just really consolidating sideways. Now, maybe we just simply consolidate sideways out here. But what's different about today versus the last several days, or really since July 31st, is that spot volatility indexed reading. But nonetheless, resistance is resistance. And until it fails, it's resistance out there. So 29.34 is a real key level. What do we say inside the ES Mini? I believe on the 2-hour time frame was 29.37. 2936.50, so 2937. So now we've got complementary resistance points out here using different tools, different time frames. Lets us know just how important this 2937 area is out there. So you can see it's really inside that range that says, yeah, I can get the go ahead and take the short, but things are different now than they have been since July the 31st. Let's go take a look at the NQ. Any information out here? We take a look at horizontal trading range as well. Wouldn't you know it? As we come into 2 o'clock, it's 1:35 in the afternoon. Where is price sitting? Right at its monthly horizontal trading range boundary level. That's at 77.41. I'm sure that number is slightly different than the 2-hour time frame that we had out there, but 77.41 nonetheless. So, hey, here you're up at resistance as well. So this certainly can support the folks that want to go short. This would be where you would, in essence, do it at. I just can't recommend that to you based upon what we're looking at in the spot volatility and based upon what we just looked at inside of the high yield corporate bond fund out there. But nonetheless, we're at resistance, or the markets are at resistance. Well, how about the Dow? Let's go take a look at the Dow Equity Futures Contract. Where is it sitting? It's sitting just below its monthly resistance level. That's at 26,321. And this says a close above 26,321. You're headed to 26,667, perhaps 26,883 out there. But right now, it's between its resistance zone as well, or near its resistance zone, 26,321. We're 26,225. So I get that. And maybe we don't, maybe the markets, I'm not suggesting, by the way, that come the release of the minutes at 2 o'clock, that the markets are just simply going to take off topside. I don't think they're going to take off topside, or they're going to take off downside either. Maybe there's going to be a knee-jerk reaction out there, but that's probably about all that we. But I'm not forecasting that. That wouldn't surprise me. That it's a relatively muted viewpoint of how the market's going to respond. I don't see it. I think the market knows what it's doing and what it's trying to do, which is deliver a layup, whatever that might be, for Powell. So whatever he does, it's not going to be what he does. It's going to be about what he says. And Lord knows he's probably practicing to try to improve upon his most recent speech, which I was looking at saying, well, the issue wasn't the words. It was just such a lack of confidence. He had such a lack of confidence in what he was doing. And of course, that was probably because he didn't want somebody asking the simple question. I don't even think he took questions last time. I can't recall. I just remember the absolute lack of confidence. Maybe he did take questions, but it was an absolute lack of confidence. Why was that? Because he couldn't justify raise. He couldn't tell you the real story, why he's going to raise interest rate. It had nothing to do with the president, for goodness sakes. He's just simply trying to stave off the gigantic, ginormous problems over in Europe and the ginormous problems in the emerging markets out there. And that's all he's trying to do, is instead of be the Fed and just to worry about the United States, he's really trying to help hold things together overseas. But if he said that to you, that would just simply start a huge move to the downside, at least overseas. And of course, that would go ahead and make our bonds move higher because everybody would continue to rush into the U.S. dollar assets. Steve Rhodes with TFNN. Be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go out to Kansas and speak with Robert. Robert, thanks for calling. Thanks for holding. How are you today?
Hey, I'm doing great. Thank you for taking my call.
My pleasure. So we're going to talk about the TLT. That's the ETF for the 20, 30-year bonds. Tell me what you're doing, how I can help you.
You bet. So I've been watching it for a while and waiting for it to, how I feel like the kind of, you say, buy bottoms and sell tops. I'd like to sell a top when it tops out, and I've just been tracking it. But I had a couple of questions that I'm struggling with, and I'm looking at it thinking it's, beginning to top out, maybe not yet, but it's approaching there. But wouldn't the price of the TLT continue, or the 20-year treasuries continue to go up if we continue to decrease interest rates, if the Federal Reserve does that? And so I was trying to reconcile that in my mind. It's like, well, is that something that's, like Larry Pesavento would say, forget what you know, just trade the chart and
trade what you see. Trade what you see.
Yeah, trade what you see and forget what you think you know. So I was struggling with that a little bit on how I was like, well, if they lower interest rates, if they continue to do so, forget about whether we go to negative or not. Just if you could continue, they have room to continue lowering. Wouldn't that cause the TLT to go up in price?
So great question. But what the Fed would be doing is the only thing the Fed can control is what they can control, which are the short-term interest rates. They can't control the 20-plus year, 30-year bonds out there, right? So, although it's logical what you say, if short-term rates would decrease, long-term rates should decrease and so forth, I don't want you to get too caught up in that thinking. Part of which is why we have inversions that are out there. But nobody really talks about what really caused those inversions. They just simply look at the numbers and say, okay, this means that there's a recession coming. But let's just try to stay on course here with regard to the idea of being able to sell tops, and then the idea of what's the message of the 30-year bond right now, which is what you're going to be using to base a decision for TLT and TBT, more so than what Chairman Powell, does on or says he's intending to do, if he says anything he may not he may not really play that card. He doesn't have to play that card on Friday, and so people may be putting too much emphasis on that. But specifically with regard to the TLT, one of the things, Robert, that I've learned that's really important to understand, and this is really important now, and is going to be really important always, but certainly for the next year as we watch how things play out here. This chart that we're taking a look at shows the price of Treasury bonds in the four major currencies out here. The U.S. dollar, that's what you and I typically think of, because when we open up our wallets, in essence, that's what we see. But we do need to understand what our compadres over in Europe are thinking. So we'd be taking a look at how are those traders taking a look at Treasury bonds in their currency, because they're only interested in, are they making money or losing money in their currency? They don't really care about us in dollars. You know what I mean?
Sure, yeah.
The same thing for in Europe, the same thing for those folks that are dealing with pound sterling. And then, of course, the same thing in Japan. So, yes, the U.S. dollar index has those three components within inside it. But from a trader's standpoint, we want to understand how those instruments are behaving in that local currency. Because in order for something to continue to truly rise and have momentum, such as the 30-year did, it needs to be rising on all traders' desks. In order for something to start moving lower, it's going to be needing to move lower in all currencies. Otherwise, you could be a seller in terms of U.S. dollars, but a buyer in terms of yen. Does that kind of make sense?
Yeah, you want the momentum of all the currencies working with you.
Exactly, exactly. So we have to ask ourselves, do we see some sell signals inside of a 30-year treasury in those other currencies? Right now, in terms of yen, it's almost back to its new all-time high. By the way, in terms of euros and pounds, the 30-year treasury made new all-time highs out here. We haven't done so inside of the 30-year treasury priced in dollars, but inside of euros and inside of pounds, we have that most recently occurring here back on August the 15th out there. But if we take a look at the way that 30-year is trading today in terms of yen, it's attempting to take out the August 15th high. In terms of dollars, U.S. dollars, that is, there are topping signals. There are at least two topping signals. I'll show you the chart out here. And this is where it gets a little bit complicated to try to put this together. So those two topping signals, one being wave number 7, that's letter G, that is on my screen out there. We know that when price gets to that, makes that 7th wave move, oftentimes we can see a significant top or bottom. Well, we have that up at the top. We also have where price has been moving higher, doing less relative energy. Another excellent topping signal out here. We got the Three River Evening Star candle that formed last week, or this week, I think, on Monday. So Monday on, the 19th, generated that signal for us. Now, price never closed below Stevie's green line here. So even though you've got the bearish signal out here, or the topping signal is really what I should say, we've not seen a key level of support broken. So price must first close below Stevie's green line, which right now you can use that as 164.01, give or take out there. There's also a brand new profile. Let's say that there's going to be some selling that would begin, and I would suggest that you would first take a look at this from a short-term standpoint. Short, meaning the TBT. What you would be doing, now this is a bearish structured profile on the daily basis out here. So if price could close below 164, what price ought to do, Robert, is head down to the bottom of its box at 160. That would actually set up to be a pretty decent, or could be a pretty decent trade inside the TBT. However, unlike the 30-year treasury, where you can get in and out for the most part at any point in time, that's not the case inside of the TBT or the TLT out there. So you kind of have to be careful. But you've got to be watching the treasury bond chart. And if you don't have access to that data feed and you're doing some technical trading out there, you're really kind of trading blind. Paying attention to the ETF will do you little good versus paying attention to the actual futures contract. But at the same time, even though we may have some sell signals out here, we really need to see prices push lower inside all these major currencies. I know that's a lot of information, but what questions, and you started with a question, did I confuse you further?
No, it was helpful. I do have a couple of clarifying questions, if I will.
Yep.
You said you can't get in and out of the TBT. Why not? Why can't you buy it and sell it like you would any other ETF?
So let's say so you've got Asia that comes online 8 and 9 o'clock at night. And so at 8 o'clock at night, all of a sudden you see something going on with the T-bonds. How are you going to get out of your TBT trade? You can't until tomorrow morning, say at 8 o'clock.
Right. Yeah, but that's now I'm tracking with you. But that's no different than you're not buying gold futures, you're buying GDX, right?
Absolutely.
I mean, you kind of.
Absolutely. But what's really important about that, and we're going to go to break, and so stay on the line if you would, we'll come back here, is that there's such a huge flow of capital into this instrument right now. It's a very just stay through the break. Let's come back and talk about that, Robert. Okay?
You bet.
You bet. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago, with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African Rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the gold report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your gold report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned, because coming up next is the Power Trading Hour right here on TFNN.
Welcome back. So, Robert, we're in our last segment here. We just have about 2 minutes. But yes, look, the point I just wanted to make inside those ETFs, it's obviously normal. Now, maybe a TD Ameritrade, I think you can trade the TLT and the TBT 24/7. I just want to point out to you that there is this flow of capital that is coming into the U.S. You've got to, that is a huge component of the trade that you're considering in going long or short the 30-year out there. And I think that is substantially more important than whatever the Federal Reserve is going to do with regard to short-term rates. The two are totally...
Helpful.
The two are totally different. And I will share with you what is more important is this set of charts here. This set of charts understanding what the global flow of capital is doing. It's very clear that the global flow of capital is coming into the U.S. assets, whether it's U.S. dollars as an asset, whether it's the 30-year or Treasury bonds, because all of those, in essence, if you're going to buy a bond, all of this is, you're getting back U.S. dollars, or whether it's the stock market. As an example, if we take a look at the global flow of capital since the March 2009 low, most people don't recognize this or understand this. It's been a great run inside of U.S. dollars, basically about a 245% rate of change if we take a look at the last 40 quarters. This isn't getting the exact bottom tick because I have to do this on a quarterly basis to make this conversion. But what most people don't understand is that it is the traders in pounds and traders in euros that have way outperformed the Dow's performance in that time period. 354% return if you're a pound trader. And we should never think that we are the only ones trading the Dow or the ES or the NQ out there. That is not the case. And you can compare that to everything else on here. You can look at the Hang Seng, the Shanghai, the FTSE, the DAX, T-bonds, gold, emerging markets. Emerging markets in terms of U.S. dollars in that time period, a 3% return. I'm sorry we're out of time, but pay attention to the global flow of capital, my friend. And thanks for calling, okay?
Thank you.
You bet. That was Robert. Stay tuned, folks. David White's up next. Hey, I'll be filling in for Tom from 4 to 5. Have a great Wednesday.